Morning and welcome to the Friday Financial Review. I'm Paul Griffiths, if you don't already know me. So, last week we covered off the UK budget, which to no surprise was full of what potentially could be considered as stealth taxes by the Chancellor not raising the various allowances such as capital gains tax allowance, lifetime allowance on pensions, and of course the personal income tax threshold as well. So, what do we do? Today, I'm going to be starting a series on investing and saving for those living in Spain. What does it mean? What options do we have? Do you have? I'm also in Spain. And to also consider what type of tax applies to the different types of investments that are available. So obviously we have the usual suspects. You've got buying a property in Spain. You've got general savings as a resident of Spain, whether that's cash or maybe perhaps you're still holding on to things like premium bonds. And then you've got the upper end of the investment, which is your general investment funds, stocks, shares, direct bonds, and so on and so forth. Okay. Now, today I just want to keep it relatively simple. Let's just look at the very, very simple or the simplest form of saving and investing, and that's just purely cash deposits. Now, I don't need to tell all of you savers out there how tough it's been in the last 10, 12 years, really, ever since the financial crisis of 2008. The central banks have done nothing but reduce base rates. Obviously, only the US really increased a little bit of it going back a year or two ago. But obviously, we've had the COVID crisis as well last year. So rates are going to stay at an all-time low. The ECB, which obviously affects savers here in Europe, been negative 0.75% for a number of years now. And then in the UK, those savers who are still holding on to UK deposits, then the base rate there is 0.1%. And there are a lot of rumours that the base rate could go even lower into negative territory. Now, as a resident of Spain, nothing wrong with you keeping hold of your sterling deposits in the UK, whether that's with the Yorkshire Building Society, Nationwide, or a number of banks that are still happy to maintain you as their client now that you're living here. Rates aren't very good. And then again, that's not much different here in Euroland. I think you probably get 1, maybe 2% at best in euro. So that would mean converting some of your sterling to euro. Good news, of course, is exchange rates have been improving ever since the deal was signed at the end of last year. A lot of people are aware, but some of you are not, any interest earned, however small they might be, from deposits in the UK, including things like NS&I premium bonds and fixed bonds. All those interests are taxable here in Spain as a resident of Spain, okay? So the tax rate is actually quite simple. It's the income/capital gains tax rate here in Spain, which for the first 6,000 euro of interest or gain is taxed at 19%. Anything above 6,000 is 21%, and then anything above 50,000 euro is 23%. And this is within the tax year. Okay, so yes, cash in general isn't keeping up with inflation, so technically you are losing the value or the buying power of your money. But of course, we understand the importance of cash, and everybody do need cash as part of their overall plan. So, emergency funding, things like that. And typically, I would advise clients to, maintain at least 6 to 12 months worth of expenditure in readily accessible form. Okay. Now, we're going to, from cash, just briefly move on to bonds in the form of government and corporate bonds. A lot of people feel this is a safe form of investing. And you know what? If you're buying bonds direct from the government in the form of gilts or Eurobonds or the NS&I in the UK, then sure, they're fully backed by the government. But of course, just be wary of bonds in general, because if you do not keep bonds within their duration or the term of those bonds, and you had to sell them beforehand, depending on what type of government gilt or bond it is, then you could stand to lose some of your capital. Again, though, the rate of return on these are very, very much below the rising cost of living. But nonetheless, it does form part of a good plan. Okay, so what have we learned this morning? The idea is, as a resident of Spain, you will have many options. Next week, I'll be running through property, and then week after, I'll be running through investing in general. But today, just leave you with, you've got cash, it's making a little bit of money. Whatever you're doing, just be sure you are declaring the small amount of interest on your tax return. Because if you don't, you will get a fine. And you know what? With the cash being at an all-time low rate, that fine that you'll get might be more than the interest that you've generated. So do make sure you do your returns, tell your accountant about it, declare them, and then of course we'll then talk about alternatives to cash in the weeks to come. I want to thank all my followers for listening in, watching. If you like my videos and all that, please do click the like, please follow, please subscribe. I'm on YouTube, Facebook, LinkedIn, so do feel free to send my links around to your friends, family and colleagues so I can expand my followers. Thank you very much for listening and have a very, very happy Friday. Ciao for now.